Hi guys, my name is Pat. Happy Wednesday, and let's continue our Forex analysis for swing trading. Okay, as you guys already know, I always start with the USD index chart here, and we have still the market consistently behaving below the blue moving average, right? So that means the overall trend in USD index chart is down and USD is getting weak overall. So that means we're gonna look for opportunities to sell USD. So let's write it down. Today is Wednesday. USD index trend is clearly down, and our decision is to look for opportunities to sell USD. Now, let's analyze the first pair USD Japan yen. Last few weeks, and we have the up and down price action like this, right? Down movement, but market really didn't go down, then up, then down. Market really didn't go down. Then for a few weeks, market consistently behaved above the moving average. So at this point, we assumed the trend is gonna be up like this, but market really didn't go up, and still it went down. So at this point, we have the two options, right? So following my system, so at this point the uptrend has begun like this, then down reversal happened like this, because the size of this breakthrough is decent enough, and we have more than 10 candles down the moving average. So at this point the trend is considered down, just to be extra safe. And if the trend is truly down like this, market is retracing currently, then at some point it should return into original trend. So let's just be safe, and let's not jump into USD Japan yen trade yet, and let's just wait for more confirmation. So if the trend is down, the market should retrace, and it should return into original trend soon. Then when the market finally retraced into a good zone like this, then it would be a good time to sell USD. And plus we have much better looking pairs than USD Japan yen. So that's why I'm not trading USD Japan yen. So next few days should give us a clear indication of USD Japan yen. So let's write it down. USD Japan yen, follow my system. Trend is considered still down, but I'm not jumping into it, and wait more confirmation. Let's wait. So let's wait more confirmation. Also, it could also possible that still this up and down movement could be continuing. The market may be doing this sideways action like this. So it's all about the probability, and we never know for sure. We just have to follow our system, and let's just make sure that that is really a downtrend reversal. If this is the downtrend reversal, we should expect some price action like this, urgent return trend. Then when the market returns into a good zone again like this, then we should be selling USD. Okay, so let's wait more confirmation. That's why I put the question mark here. Next pair, USD Canada dollar, loonie. So here on the loonie, last several weeks I have been calling out, and we have up, down, up, down, up, down, up, down, up, and like it's a perfect indication of a sideways action. There's no actual trend. So when the market is doing this sideways, like they can demonstrate the jigsaw behavior, and that can really eat you up. So it's better not to trade when market is doing sideways. So loonie doing the sideways action, and we're not gonna trade anything. USD Shifter franc. So here also downtrend, also downtrend like this. Then market went up, lot of candles, consistent up candles here, but market really didn't go up. Then market is went down, lot of candles down here. It's a perfect indication of sideways action, and I'm assuming the sideways action movement like this. So no trend, no trade. So let's write it down. USD Shifter franc trend is doing sideways, trend is doing no trend, market is doing sideways, and we're gonna do nothing. Okay, pound USD. Here in the pound USD, we have nice healthy uptrend. The meaning is that pound USD is getting weak against the pound USD. Up leg like this, but the size of this last up leg is really big, so it's unreasonable. When the market is moving big like this, it's not likely to make a Fibonacci extension. So at some point I will assume the market will retrace and make a new high point like this. So for some reason market retrace into 0.5, 50%, fake out at a 50%, then it will be a really good zone to buy pound USD. I'm gonna set my stop loss below the local minimum here. I'm gonna set my take profit at the local maximum here. It's a really nice risk and reward ratio 1-to-1 trade, but it's a really high success rate trade. I would give it about the 80%. So let's just wait what happens on pound USD. If the market retraces and fakes out at the 0.5, 50%, then I would recommend buying pound USD. By the way, this week on Friday we have the employment news, and maybe market could fake out, who knows. So let's write it down. Pound USD trend is definitely up, but the leg size is too big. For that, if the market retraces 50%, and we're gonna trade for nice 1-to-1 risk and reward ratio trade. Okay, Euro USD. For Euro USD, and we also have nice uptrend. Market is behaving consistently above the moving average line, and trend is definitely up here. And a few days ago market faked out a little bit here, and which is totally normal, and since then market has made a nice up leg, then retraces into a good zone here, and here at the Fibonacci 40%, 0.618, 40%, I entered about risking 0.6% of my account. So I set my stop loss below the local minimum here. I set my take profit on the Fibonacci extension 1.618, and I have about risk and reward ratio 1-to-2. Nice trade going on. So I have closed my positions on the Aussie, and I'm gonna explain it right now. So right now I entered the good zone on Euro USD about 0.618 here, 40% retracement, and it should return it. It may be retraced a little bit, but it should return into original trend soon and hit some Fibonacci extension if the trend is still there. Okay, so let's write it down. Euro USD trend is up, leg size is nice, and I bought 0.6% at 0.618. So I entered the good zone, I detected the trend, that's a perfect execution on my part. Okay, now let's analyze the Aussie. So here also we had the lot of candles behaving consistently above the blue moving average line, right? So at this point we were sure that trend was up. The market faked out here a little bit, which is totally fine. Then market seems to be returning the original trend. Then market faked out again, and seems to be returning its original trend. So that is so this action, I don't like this action. So down fake out, up fake out, down fake out, and we have several candles hanging out below the blue moving average line. Although the frequency of this up and down action is too frequent, it's just happens in a matter of 2 or 3 days of span. Still, like, I don't like this back and forth action of the blue moving average line. So first, it's indicating the sideways is nature, and even though overall trend is still up, here in the back and forth, this blue moving average line is just a sign of a weak trend. So at this point, I had two options, right? I could keep my Aussie, which starting to look like a sideways action, and but on the Euro USD, we had a much better price action, and the market was in a good zone to buy, right? So in this case, if you have something better and shift them from Aussie to Euro USD, it doesn't incur me any loss. I was just break even, so that was a good decision. So even if this break even pattern continued, if the market retraced even more, I could interpret Aussie as a sideways action. So closing the Aussie position at the break even, opening the Euro USD with the 0.6%, it was just a perfect execution, and no point hanging out on the not great looking pair. So that's why I closed my Aussie position. Okay. Lastly, New Zealand dollar USD. Here on the New Zealand dollar USD, we have up leg retracement, up leg retracement, up leg retracement. Now another up leg seems to be forming. So, but the size of this up leg is really small. I don't like it. So even if market retraces into a good zone, it could fake out, making a new local point here, and it may return into original trend like this. So I don't like trading the New Zealand dollar USD right now. So what I would recommend is that if the market still continues to go up like this, making a nice healthy decent sized up leg like this, then wait it until it retraces into a good zone. Then it will be really good to buy New Zealand dollar USD. Until right now, I don't like the size of this new leg. It's just too small, and it's best to wait on New Zealand dollar USD. And usually when you're dealing with the small leg size like this, it could be a part of much bigger leg like this, right? So maybe up retracement, up retracement, up. It could be like this. Right? So when you're dealing with the big directional leg like this, and market is just likely to retrace into 50%, taking out all these small local points, then return into original trend. So it's really important to notice that you don't trade on the small directional small legs. If it's too big, it can't make the Fibonacci extension. If it's too small, your stop losses can be easily taken out. So you want to look for an ideal sized, not too big, not too small, directional legs. So that's what I mean. So yeah, New Zealand dollar USD trend is up, leg size is too big. If somehow it retraces 50%, I would trade it for 1-to-1 risk and reward ratio. Okay, now let's plan for tomorrow, right? So we have opening position on the Euro USD. So if tomorrow the market retraces against me like this, what if the stop loss hits, right? Then at this point we have the lot of candles down here, and usually Euro USD index are highly correlated, and if somehow and USD index goes up and takes out this new local point here, then we will be certain that trend has reversed, right? So if let's plan Euro USD, if stop loss happens tomorrow, we're gonna take it as a reversal. Which is totally fine. Who knows? Nobody knows about the future, and we will take the loss, and we will sell our. We will position ourselves to buy USD. So if stop loss happens, and we are not gonna panic, we will just take it as a reversal and take the loss like a man and position ourselves according to a new trend. Okay, now interesting. Now next possible case is that what if the market keeps retracing against me tomorrow but doesn't hit the stop loss here? Then at this point we will read the market as a fake out, right? So market loves to do fake out, and if the USD index is still consistently behaving below the moving average line, then we are certain. Then we are still current trend as the USD is weak, and 10 or 20 candles behaving below the moving average line here, and we will still read it as a fake out, and at some point it should return into original trend like this. So still, if that is the case, we will not panic and read the market as a fake out. If the retracement happens tomorrow, and we will read it as a fake out. Or tomorrow market will return into original trend, and it will continue along the trend, and if that is the case, trend is our friend when we are on the right side of the market, and it should hit the take profit at some point. So if the market starts going into trend direction, and we will hit take profit in a few days. Okay. So, and also one possible scenario is that what if the market starts retracing tomorrow, right? And then we will have few candles down here, and still then another thing is that we have down candles here faking out, lot of up candles here, and lot of down candles here. Then it will start to look like a sideways, but still USD index trend is protecting us, so it should return into original trend soon. But somehow it starts to faking out like this again, then it will be just like another Aussie case we just went through, right? So then I will check if there's other pairs giving better opportunity, and if the market behaves like this, then I'll take it as a Euro USD doing the sideways and transition my position. But of course, it's always important to plan only the one step ahead, only for tomorrow. If you start planning for I do this, then do this, if do this, then do this again, then you will run into rabbit hole and you will just lose your mind at some point. So let's not plan too ahead like this. Let's just keep planning for tomorrow. So if the tomorrow retracement happens like this, we will still take it as a fake out. It should return into original trend soon, because the breakthrough of this first it's just not a lot of candles here. If the market was is in the state of the sideways action, I will assume the decent amount of candles here, 10-20 candles here, then also another 10-20 candles here, then another 10-20 candles below the moving average line. Right now this down breakthrough is just too small and it's safe to ignore it. Okay guys, thank you for watching and see you guys on Friday.